to kind of get in the mood. This is the Cow Guy Close, and I'm Scott Shellady, also known as the Cow Guy, if the jacket didn't already give that away. All right, here we go, right? In the life cycle of this new AI era trade thing that we're in, we're seeing a little bit of movement now. OPENAI has completed a deal to raise $6.6 billion in new funding, giving the artificial intelligence company a $157 billion valuation and bolstering its efforts to build the world's leading generative AI technology, right? The funding round was led by Thrive Capital. That's a venture capital firm headed by Josh Kushner, which put in $1.3 billion. Microsoft Corp, OpenAI's largest backer, put in about $750 million on top of the $13 billion it had already put in. And the deal is one of the largest ever private investments and makes OpenAI one of the three largest venture-backed startups alongside Elon Musk's SpaceX and TikTok owner ByteDance. Interestingly, NVIDIA, you've known them, right? They also were a part of this investment. They chucked some money in, too. Now, my next guest, he's a professional investor, and we'd like to get his take on this story. AI is kind of in the headlines. Let's bring on Eddie Ghabour. Eddie, thanks for coming on. I suppose
Thank you for having me.
Yeah, no, I love having you on. You're a fan favorite. I mean, it's pretty interesting to see how well they did with this, but I've been saying, and I learned this from Ray Wong a little. You've seen him on some of these shows. We had him on earlier too. But you know, this move from the hardware now to the software, and then from the software we're going to move on to the firms that employ this stuff. But right now we're in this software area, and everybody's really excited.
Yeah, look, AI there's no doubt in my mind, in my opinion, this is like the internet boom when it first started. Now, the risk when you're starting early on in early innings, there'll be a lot of companies that go bust, just like the internet collapsed when that happened. But the key is if you can find the companies that are best of breed in AI that are going to survive throughout the life of this, you can really make some substantial dollars, in my opinion. It's like getting into Apple in the very early innings or an Amazon when it was at $10 a share, because this is huge. And you're going to see more and more capital getting invested to research and development here. And this is massive. Not only is $6.6 billion they raised, they had a $4 billion revolving line of credit that they can use over the next 3 years. So that's $10 billion of fresh capital. It's going to get invested into these names. And selfishly, NVIDIA is one of our top holdings for clients, and they're benefiting from that today as well, too, on a very ugly day in the market. So that's probably why my smile is a little bigger than normal today.
Well, I mean, and that's, you know, look, I was an art major before I was a finance major. So, and I also was the COO of a technology company in London. And I really can appreciate what technology can do, right? I can't code, but I absolutely can appreciate what it can do. And now with this new AI era that we're in, I'm pretty excited about it too. But to your point, you would have been really excited about the automobile replacing the horse back then. If you get the chance to invest, you would have liked to have invested. But back then, there was about 120 car companies you could have chosen to invest in, and today there's only about 3 or 4, right? So that's a great example about there's going to be a long road to riches on this thing. It's not going to happen overnight, right?
That's exactly right. And I think what you'll see happen is we know we are in a debt bubble right now that will cause a major market drop sometime in the next couple of years, in my opinion. And I'm not trying to sound like a perma bear because I'm not. I'm just using some common sense. And when those bubbles burst, that's usually when you have the companies that don't have the strength that go away. And that's what you're going to have to be careful of, because when you're in a bubble, everything seems to go up, especially in a risk-on environment. But when those bubbles pop, that's why you want to own best of breed. And frankly, NVIDIA is best of breed, so we're playing a little bit safer by using a name like that. But there'll be many, many other names that come out. But to your point, I think you have to be cautious on it, going all in on one particular startup, because when the bubble bursts, if they don't make it, you can get wiped out.
And as you said too, I mean, with over $10 billion, you got a chance of lasting, a little bit of a staying power. And which I think is going to give them obviously a leg up. Are we seeing any other ones out there that interest you? I mean, you obviously have to have your finger on the pulse. You've liked NVIDIA. You just said it. Anything else? I mean, we've had somebody, Mike Lee, you might know Mike. He came on the show and said one of the biggest things he's ever seen in his life is Palantir. I mean, do you have anything like that?
Yeah, so look, Palantir's on our watch list. ARM is on our watch list. One way we've played it for clients that want to play it a little bit safer is using an ETF, SMH, that's in the semiconductor space, to get some direct exposure to AI and own a basket, because the volatility on these things are huge. Even NVIDIA, it was at 140 not too long ago. It got down to 100. I mean, those are some pretty big moves in a couple of months. So our client base is a little bit more conservative in managing volatility. Important to them. So we would go best of breed and names like I just mentioned, but then also use some ETFs to complement that to try to hopefully lower volatility for our client base.
So Ray told us that he saw, the hardware space, which is the NVIDIAs. That's still very exciting, but it's maybe come off the boil a little bit. I mean, it's still doing well. It'll continue to go higher, but it doesn't have the oomph that it maybe had before. And he says that's really the natural progression from these trades, moving from hardware now to the software, Palantir, or maybe OpenAI. That would be one. And then after that, that'll come off the boil as well. And we'll move on to, say, some companies that are really employing that AI into either their own firms and into their customers. Is that kind of the same thing that you see, that kind of generation?
I do. And look, like even in the financial service space that I'm in, you're starting to see that being used more and more with client meetings. It makes things a lot more efficient, accurate. Now, the bad news is it does take away from adding labor to your firm potentially because of that. But that's ultimately what you're going to want to be. You want to be with the companies that are going to use cutting edge technology, is going to make them more efficient, because at the end of the day, the stock market cares about profits and profit margins. And those that use the AI efficiently are going to have higher margins than firms that don't. And frankly, if you don't adopt AI, you're going to get left in the dust and become obsolete. So no doubt over the next 20 plus years, this is going to continue to take on a larger and larger sharehold of what companies are using in regards to implementing and executing on their processes.
Well, on a personal note, Eddie, hopefully AI doesn't replace the cow guy, right? Because I've already been replaced once on the trading floor when that went electronic. So I've reinvented myself now sitting behind this desk. Now, if AI comes up with an AI cow guy, I'm in trouble. So we'll see.
I think you're safe. You're unreplaceable there, buddy. I promise you there.
All right. Appreciate you coming on. Thank you very much, Eddie. Eddie Ghabour coming to us from Delaware. Thank you very much, Ed, for being on the show.